Welcome back. We've talked a little bit about the ups and downs of the cattle markets and some of the factors that go into those price swings. And now I'd like to talk a little bit about exports. You know, it's been one of the bright spots in the market, especially fourth quarter. We have export values adding about $300 to the price of a fed steer, Kevin. And what's your sense of where we're headed in 2017, both in terms of value and volume?
You bet. We're pretty optimistic on the export front. Of course, you know, nobody knows from an administration standpoint, but as you think about it, we're going to have ample supplies and prices generally at or below a year ago level. So we're pretty competitive on the global stage for beef despite the strong dollar. Typically, exports, access to different countries are a key component. We had huge increases last year to both Japan and South Korea. We've got to remember that Australia, which we compete directly into those two markets, is in the process of having expansion, so their supplies are tight, prices are high, so we're very competitive into those two markets as we think about it for 2017. So we've got volumes up about 5 to 6% for 2017 for beef, and we think on a per head value it'll increase to about $320 versus $300.
That's good news. So you mentioned the value of the dollar, and Don, I'd just ask you, you keep your pulse on the global market and the global economy. What's your sense of the impact of the global economy on U.S. beef?
I think guarded optimism. We're seeing some better spending numbers out of Japan. We closed out the year with GDP numbers in China certainly at the more positive end of expectations. Australia still kind of struggling to stay out of recession, but doing so. Clearly looking for growth in South America, specifically Brazil for the year. We're still seeing the effects of the Trump bump on the U.S. economy, and we're seeing some effects there. So really, overall, globally, pretty positive. Europe still a bit of a question of where we're at, but as I started, I think globally, guarded optimism. Very good.
I go to some meetings. I constantly hear about Brazilian meat and the imports of beef into this country. What's your read? I mean, how big impact is that having on U.S. cattle markets today, Kevin?
We need to remember the Brazilians have a quota. They're in the other category, so that number is pretty small. The biggest driver of imports would be lean 90% trim, and Australia would be the destination where most of that product is coming from. As I mentioned earlier, they're in the process of rebuilding their herd. Their prices are relatively high, so they're not as competitive coming into our country. Last year in 16, final numbers looks like imports are going to be down about 11%. We forecast in 17 they'll be down another 7%. And again, there's a strong correlation there between domestic cow slaughter, which we see increasing in 2017, and imports. If we produce more grind ourselves, we import less. So that correlation would suggest that imports will be down in 2017.
Yeah, thanks for that clarification.